Hello guys, this is a mic test. So this is Nirav and we'll start in a few seconds after I have checked the mic at my end. This is Nirav and okay, so it looks like at my end the audio is working well. And I'll wait a few seconds before we start off so that some more people can join in and maybe one of you who is online can also verify that the audio and everything is just working fine. Hello, Abalin. Can you confirm if you can see the screen as well as hear me just fine? Everything good. Thank you for the confirmation. All right, guys. So in that case, let's not waste any time. And before I get into the webinar and other stuff, let's first get done with the legalities. So here on screen, you can see the disclaimer suggesting that all content presented here will purely be for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading, investing, or for any other activity, you yourselves will be liable for your profit, your loss, or loss of profit, or any other situation that might arise out of it. Rest of it you can read on screen. Now that we are done with the legalities, let me just give you a quick introduction. So my name is Nirav Yadav. I'm the admin and owner of a YouTube channel called 50 Eyes Market Analysis, as well as the website 50eyes.com. This is a website where I present my views on Elliott Wave and trading in general, right? So this is the domain 50eyes.com, as you can see on the top. So in this website, you can see all the webinars that we have done so far. We have done 18 in this series of trading opportunities webinar. Good evening, Madhavji, on YouTube. So we have done 18 in this series of trading opportunities webinar, and this will be the 19th one. All of them are posted here. If you want to check my past work, you can also check that by going to market analysis. Other stuff like my courses, etc., are also available here, right? Let's head on, just quickly show you my other work. So this is the YouTube channel I was referring to. And by the way, this live broadcast is going on YouTube simultaneously with TradingView. So whichever platform is convenient to you, you can join it there. And yeah, I'm also the author of the book called Think with the Markets: Secrets to Achieve 80% plus Accuracy Using Elliott Waves. It is available on Kindle platform on Amazon. So if you go to Amazon, you can just get instant access to it. And lastly, before we move any further, let me just quickly show you my success over the years. So I've been doing it for 7+ years, and since 2016, I have kept a track record of everything that we do. So my accuracy in that year was 83%. 2017, it was 87.5%. And so on and so forth. You can say 2018 it was 84.61%. 2019 it was 84.88%. And this is the spreadsheet which contains all the instrument names, right? Crude, gold, silver, S&P, Nifty, Reliance, etc., and what was discussed and what happened afterwards. And this is the link to the webinars or the video. Right, and in 2020 our accuracy was 88.52%, and again the same format: instruments, what was discussed, the link for the video, and what happened afterwards, so on and so forth. For 2021, 2022 is yet not compiled, right? So all of this is here, and I'm showing it off to show you that I am a master of what I do, right? And yeah, that's what I'm showing it for. A little advertisement from me in my way. So Avalin is saying that's insane, man. Good job. Thank you, Avalin, for the comment there on TradingView. So, guys, now that we are done with the quick, introduction, and I've also talked about my book, my video course, my personal classes you can send an inquiry via the training program LT link here. These are for personal classes. So now that we are done with all that, let's head over and let me discuss the format of this webinar. So in this 19th webinar, the way we will proceed is, first of all, I'll go over the chart of of Euro USD, followed by EURCAD, followed by USDJPY, EURJPY, and then gold, crude oil, S&P, Nifty, and Bitcoin. So in this sequence, we'll discuss the chart. Once I'm done with the discussion of a chart, I'll ask you guys if you have any doubts. You can just post that in the comment section if you have any. Right? If not, then kindly confirm that you have understood whatever we are discussing by typing in clear or understood or something of that sort. Right? So that's the way we will proceed in this webinar. And before we load on the chart, if someone can confirm once more that my audio is loud and clear and the screen is visible, that would be nice. Okay, so first of all, let's head over to our chart of Euro USD. Now, thank you for the confirmation, Avalon on TradingView. So in this chart of Euro USD, what I'm seeing right here on screen is that nothing really has happened since our discussion last time. And our discussion last time was that from this point of reference, we have a which is 0.95356 and date around 28 September 2022. We have a possible WXYXZ. And by the way, guys, I'm using Elliott Wave, which is my area of expertise. But if you are not familiar with it, no issues. I will discuss the basic concepts so you can still follow along. Right. Thank you, Madhavji, for the confirmation. Right. So from 1 second. So from this current chart, what we can see is a possible WXYXZ is what we were expecting, and that should simply look like this. W up, Y up, and Z up, and all three legs W, Y, and Z are connecting via connecting wave X. A connecting wave X, right? This is what you see here: the connecting wave X, the connecting wave X. So once this formation is complete, we should see a down move. However, that is exactly not what is happening right now. We were expecting at least something like this, right? So it is obviously possible that it can do that right now, but it has taken a little bit too much time for what do you call the general guideline of Z completion. We generally do not see this much of movement. So basically this hypothesis is becoming less and less possible or less and less likely. So at this point, I would like to wait and watch. I'm not interested in adding shorts on this counter until we see the suggested break, right? And it is possible that this market is doing some other count, or it is possibly forming some other pattern. It's possible, right? So from a short-term perspective, intraday wise, I might look for shorts, but our last perspective was that swing trade, that is a big move we were expecting in the downward direction. I'm not going to be waiting for that because we don't have any confirmation yet. The best place, I think I will just push an alert around. So I'll just push an alert around this 1.0614 level, and if it goes below it, then I'll look for one possible leg down, which I'll just draw as a 1:1. So not much of a big move we are expecting, just a small low below the last recent low, which is around 1.05801. So a little lower than 1.05801 is what we might see. Right. So this is my current take on what do you call this chart of Euro USD. Small shorting opportunities intraday wise we may look for, but nothing really big. We are not expecting really big movements because there is a possibility this count may need an update. So if you guys have any doubts, you can just post them in the comment section while I head over to the chart of EURCAD, which will be our next chart for discussion. Also, guys, if you are clear on whatever we discussed, typing in clear in the comments would be much appreciated. So let's head over to our chart of EURCAD, and as you can see on screen here, we have what we call a possible correction still in progress, right? So in the last webinar, when we discussed this chart, thank you for the confirmation there, Alexander. So in the last discussion, when we talked about this chart, or last to last discussion, right? So basically our setup has been so far that if the market goes below this green trend line, right, or parallel channel line, whatever you would call it. So below this trend line, we will look for selling this market, right? And then it went below this line or crossed it basically, and it has given a sort of 1:1 trade successfully so far. But as I've said so many times, the expected downward movement should be bigger, and because it is not really going towards that level, for instance, our first target which was achieved was 1.4386, right? And the next target is around 1.42611. But so far from the price action, it does not look like it is very interested in going down. So hence, I'm not also interested in this EURCAD chart, right? There are better setups, which obviously we will discuss in the coming webinars. So for instance, I am not interested in EURCAD, but from a trading perspective, the short side is still open. And from our Elliott wave analysis, it is possible that it might go further lower, right? But I am currently not going to add any shorts on it, right? However, I will place an alert at a level where I think it might become of interest for me. So that's about it for EURCAD. I'm not trading it, and I'll wait and watch. And even the shorts, if they come, I'm not much interested in them because there are better opportunities which we are going to discuss in the coming charts. If there are any doubts, you can just type them in the comment section, or we'll move on to the next chart of USDJPY, right? If you have no doubts, please type in clear or understood or something like that. Hello Zalat, USDJPY is the next chart as I said. So let me just load the chart on screen. This is going good, right? So as you can see over here on screen, if by the way you guys were following me in the last webinar, there we discussed that even though it may have completed the Z, I was not interested in going long because my understanding was that it is still going downward, right? So if it's still going downward, then why will we be interested in longs, right? So Zalat, please wait till I complete my discussion and then I'll say that ask the questions, then post in the questions, right? Okay, so getting back to our discussion. So what I'm saying is that in the last webinar, we were saying that it is possible that this is the A here, this is the B, and there will be a C down remaining, right? And I also mentioned that we do not have confirmation for it, but I had placed an alert which got triggered during last session itself, I think. And we are since then heading lower. So let's have a look at the situation right now. So from this point of reference, which is the price level of 151.923, this is our starting point of analysis, or also what I call as point of reference. What we have again is the same pattern which I discussed earlier. Right? We discussed this pattern earlier. We call it the triple zigzag or WX Y X Z pattern, right? So as we discussed, the first leg down is called W, next leg is called Y, and then Z, and it is all joined by the connecting waves X, connecting waves X, right? So because it is the pattern, so based on this, we can see that this is the X, the second X, right? And after the second X comes this Z wave down, right? So as I said, the Z wave will have three waves inside of it. Okay, so three waves. The first leg down, this one is what we call the wave A. The next leg up is what we call the wave B, and the next leg down is what we call the wave C. Now, if we look on the actual chart, I have labeled this as the first leg down or the wave A. This may be the end of B, and even if B is progressing sideways, doesn't really matter. Eventually, we will see the wave C down, and the wave C down should take out the low, which is the low of 130.498, right? So basically, it should go lower than the last low. That is our general understanding of this market. Obviously, I can project much better targets on it. We can use the 1:1 level, and there are some other ways to project targets for these kind of situations. But since the position of wave B is not completely known, for instance, if this was the end of wave B, then we could have drawn this parallel channel, right? And some dumb guy was commenting in the comments earlier that how did I draw this? So for that person, whoever that guy was, I think he was a troll. But I'll just clarify that this is called a parallel channel. So this is a parallel of this thing. Use your brains before commenting. So anyways, getting back to the point, this is the A down, the B up, and the C down. So what we have is a zigzag correction. So generally what I would like to do is we will measure the length of wave A and we'll project it from the end of B, right? But as I said, we do not have the end of B as precise. Like we don't exactly know if this is the B or it is continuing sideways. So I will avoid giving you any specific targets here. But as such, the direction is down and shorts are already on this counter. By the way, guys, if you were following me in the last 2-3 webinars or whichever webinars, we were discussing this in quite detail, and we had already planned that this kind of situation can happen. So if you were following, you would have been able to capture these shots, right? So that's my take on USDJPY. We are seeing downward movement, and I expect it to continue. One more thing you can do is once you have the B confirmed, you can draw this channel and the downward trend line, or this trend line basically. It will also be something that will suggest you the downside targets. So that's what we have for USDJPY over here. Very clear trade setup. And as I said, if you are following us, you would have been able to catch it early on. And at this point, I'll also like to clarify that in the last 2 weeks, we have caught 8+ trades now. And those are the big movements I'm talking about, not the minor movements. So 8+ trading opportunities. And this one, if you include it, will be 9. So that's why I keep saying to you guys, join these webinars when they are conducted live. And I go live on Monday, Wednesday, and Friday at 2 p.m. GMT. Right. So join me live if you want to catch these opportunities firsthand. If you don't want to miss out, sometimes or not sometimes, many times what happens is we discuss something, and by the time the webinar is complete, in the next 30-40 minutes, the market moves in that direction and it even hits the target. So you got to join this live because it's called trading opportunities. If you guys have any doubts, you can just type it in the comment section or just type in understood, and we'll move on to the next chart, which will be the chart of EURJPY. Again, this one also we had caught early on. As a matter of fact, if you had joined my last webinar on what was it, the 18th webinar, right? So in that webinar, I said very clearly that we are still waiting for this channel to break, this red channel. And so once it breaks, it will be a short trade. And the downside target, we are expecting much lower movement. But the shorts are already triggered. It went below the channel, right? So it went below the channel, and technically you should place your stop losses at the wave too high, near the wave too high, basically somewhere around 142.825, right? But personally, I don't think I'll what you call ever do such a thing that place the stop losses that high. Generally, I like to trail these kind of situations, and based on your entry, if you were able to catch it right at the break somewhere here, then you can just trail according to your entry and start booking partials, so that if it turns back or pulls back, you can add more back again. So what I'm basically talking about is general position sizing. I'm not going to discuss that in much detail right now. What we are going to discuss in more detail is what is the structure. So from the counts we have on screen, what it looks like is we may be heading down for a wave 3. So from this point of reference, we have the 1 here and the 2 here, dot 1 Roman, dot 2 Roman. So generally the dot 3 Roman, we measure the 161.8 of wave 1. That is, we'll measure this length and we'll multiply this length by 1.618 and we'll project that measurement from here. So it will go something like this. I'll use the fib tool here and then I'll measure this length, right? So the 161.8 is very low. I'm not much interested in that, what you call distant targets. But if you are interested, it is coming around 131.644. And I don't think I'll be holding it for that. So just to discuss the minimum targets, 1:1 is at 135.967, right? That's your important target over here. And the target minimum is always the last low. So at the minimum, if our analysis is correct, it should break lower than this, right? So this is what I will call as T minimum. So this is following our plan precisely as expected. And as I said in the last few seconds, I'll be repeating myself again here that, 1 second, let me adjust this. That's fine. So I'm repeating myself again here. We already discussed the whole plan. This was all well known to whoever joined the webinar last time. And you can just check the recordings here as well. As a matter of fact, I think I may have it. But yeah, let's leave it. I think if I have it, I can just load it on screen. 1 second, let me see. It was discussed around 20th minute in the. Okay. Looks like I have done a small bit of error here. On the website, I have embedded the 17th webinar on the 18th webinars page. Okay, at least I caught it on time. I can change it later on. So I'll just go to the YouTube channel instead. Around the 20th minute will be here somewhere. So I'm just checking out the recording for the last webinar, guys. I always watch it in the highest quality 1080p because we use dark black backgrounds and they do not look the best. Yeah, there it is, EURJPY, as you can see. I missed that. Yeah, this is, as I said, was discussed in our last webinar, and we are expecting a fall here. This is the discussion, and this is, as you can see, I have drawn the whole structure, and I'm expecting a downward movement. So I'm just showing it to you guys to tell you that we already knew about this opportunity and we caught it in live market. And at this point, before I continue my discussion of Euro JPY, if you guys are watching on YouTube, hit the like button. If you are on some other platform like TradingView, then hit the rocket button. And if you are watching this later as on a recording in my articles or embedded on some other social media website, then you can subscribe to me by going to 50 Years Market Analysis YouTube channel. Also, make sure to subscribe to my emailing list on my website 50years.com so that you can remain in touch with me and get all the important details. So, anyways, heading back to our discussion, and there's actually not much to add here on your JPY. Target minimum is here, the next target is here, and we'll see how it goes. Of course, when you are in profits, keep trailing it. Nothing is for sure here. It looks like it will work out, but trailing ensures that you do not lose on a position you are in plus on. What's the last trade you took? What's the last trade? I mean, I do a lot of intraday trades, so I take a lot of trades. Sometimes I trade 100 plus times within the day, right? So not much of a important question. But the last trade today was on Nifty, which we'll discuss later on. So let me know, guys, if you are clear on it. You can just type in understood in the comment sections before we move on to the next chart, which will be of crude oil. I just joined 6 minutes ago. Do you trade natural gas? No, I have stopped trading natural gas small time ago because of the liquidity issues in this counter. Okay, thank you for the clarification here. Let's head ourselves to the chart of CL. So CL crude oil, right? So last time we discussed very clear opportunity. By the way, guys, if you are not attending these webinars regularly, I will again point out that we were able to catch this leg up, this moment up, and it is discussed before it happened, right? Like we were able to catch it beforehand, and we were also able to determine the price structure for this thing, right? So you can again check it in the last few webinars, right? I'm not going to go and show you the recording again and again for it. But another reason why you should keep attending these webinars live. So let's head back to our chart on West Texas oil. And our discussion here suggested when we discussed it last was that this was a diagonal formation, right? So in the diagonal formation, what I said was that below this trend line, right, this market is a sell short. Right? So this is the white trend line. And what was happening last time was, let me just show you very clearly here. So what was happening was in the last webinar, which was done on, what was the date here? The date was 20th December, right? So in the last webinar, the market was already here. It was already testing this trend line. Okay. So again, you can check it, right? But you can see the dates here and the time, you can match it. So it was already testing this trend line at that point in time. So what I was saying was that this is a classical setup. So what I mean by classical setup is that very high probability and very clear setup. So let me just explain that in the rough area. So let's say you have this price action within this trend line, something like this. So generally, there are multiple ways you can trade these kind of situations. If you are sure that this is the right count, then first of all, by the way, I've drawn this trend line a little bit incorrectly, but you get the point. So first of all, you can take the first trade on the break of this trend line, right? When the market moves below it, this can be your first trade, right? But this is not a very high probability situation because maybe your analysis was wrong. And if your analysis was wrong, the trend line is also wrong. And if the trend line is also wrong, then what are you even trading, right? So there comes the second setup, which has a higher probability of success, which is that once this market breaks below this trend line, you wait for it to retest it. That is, the market goes back and touches the trend line again. Okay. So this is what I call the classical setup. Maybe I'm the only one who calls it, but I call it classical because this is very clear and has a higher probability of success, right? So when we were last discussing this chart, this was happening. This was already testing this level, right? So, and I said that this is the classical setup, and if this market breaks lower than this last low, actually, you know what? Let me just check the exact price levels and time. So, anyways, I'll just not check it. I'm just saying that if it retests it, then it is generally a higher probability setup to downside, and it has gone a little bit down, right? So it has so far followed our analysis, right? But I had not traded this short side, right? Why I have not traded this short side is that let me explain it again. We discussed this in the last webinar as well. I have not yet traded it because I think this market might be following a more bullish count. So by a more bullish count, what I mean is something of this sort cannot be relegated as of now. So because our upside target zone is this white box and this white box has not yet been touched, I cannot relegate the possibility that this market will give one more leg up before it corrects, and then basically it can go in this price zone yet. We do not have any confirmation if the downside which is going on right now is huge or not. Okay. So crude oil, basically it means if you were following me, you would have been able to catch some part of this fall. And as I said, I personally did not trade it. I don't feel like it's the right opportunity or the best opportunity. No such thing as right or wrong if you are making money. So what's it gonna be, right? So two possibilities exist here. Both are in different directions, as you can see with the CN hypothesis 3. CN color hypothesis 3 suggesting upward movement, and the red color hypothesis 4 is suggesting downward movement. Both are in counter directions. So situations like these are a wait and watch. All you can do is just push an alert here, an alert there, and just wait. So I will be interested in holding some longs on it if it goes higher than 80.79. Shorts, we don't have any confirmation. So we'll see as it goes. If there is some very sharp movement down, then I might become interested in shorts. But for now, I have no interest in them. Right. So CL here, right? Nothing more to add here. If you guys have any doubt, you can just type it in or just type understood before we move on to gold, followed by S&P, Nifty, and BTC. Clear all the news on it. So I'm not interested in news. I personally do not look at news. So do not post that in the comment section, right? Only post your queries if you have any. Otherwise, do not give me information I'm not interested in. I'm a pure price action based trader. And also, a lot of people say a lot of things. You can turn on the news. One guy is saying it will go to the moon. One guy is saying it will go to nothingness. Who knows, right? So if you are going to base your analysis on some random guy, then why are you even coming here to listen to my expert opinion? Keep that in mind next time you post. So I'll just now head over to the chart of gold here. So in gold, last time when we discussed, again, by the way, I'll point out to you guys if you are not in these webinars regularly, this is the diagonal pattern we are following, by the way. And we have successfully been able to capture this up move and this up move, right? And to add to good things, this last leg up, we also captured this one. Like literally, we had a trade setup, and the target was that it will just go higher than 1824.40, basically this high. And we discussed it when this market was, I think, somewhere here. I don't exactly remember it, but we were able to capture this whole move, like literally the whole leg. So in gold, we have been able to capture all these small up moves or the minor up moves, right? So again, another reason why you need to keep watching these webinars when they are broadcasted live. Hello, Ganpati. Nice to see you again, and good evening to you. Okay, so heading back to our discussion on gold. Uh, as I just mentioned, we have caught a lot of these moves. And the current running analysis is that we are in a diagonal formation, right? And if you guys are familiar with what a wedge pattern is, then a diagonal simply looks like that actually, right? So I'll just remove everything here. So this is what a wedge pattern in price action terminologies is: trend lines converging and price action inside of it moving slowly but in a particular direction, in this case up. In Elliott wave, when we call it a diagonal, we implement a special rule that it should have 5 waves inside of it, and the 4 and 1 will overlap. So this is the 4, this is the 1, and they both are overlapping, right? And we have counted the internals in 5 waves with each wave of 3 waves movement. Okay, so last time when we discussed, I said that the target minimum is that it will take out the high of 1826.20 or whatever this last high was on your chart. It has done that. After that, it saw some sell off. Then our updated trade setup became that once this market takes this trend line to the downside, that is that this market goes lower than this trend line and then retests it to the upside, then it will become a possible sell setup. So nothing like this has happened. So it's just a rediscussion of the same thing, right? So that's it, guys. Nothing more to add on gold here. We have a setup on the downside, right? And the downside setup will become activated once we see a break of this yellow trend line. And once we see that, we'll be looking for possible sell off in this market, right? Basically, that's it for gold. I'll head on to our next chart of S&P, followed by Nifty and then Bitcoin. We'll wait for a few seconds. If you have doubts, you can just type them in the comments. Okay, so one additional thing is that if the wave 5 is still continuing, we might see some possible short-term intraday longs. That is, this wave 5 will head higher than the last high again and do something like this. But I'm not really interested in that as such. So we'll focus on the more clearer thing there: trend line break and sell setup. So what about you, Ganpati, Zalat, Madhavji, and on TradingView, Avalin, and other people who are online? If you are clear and have understood what we are discussing, how about I see something like understood or clear in the comment section while I load the next chart of S&P. Okay, so on this chart of S&P, I'll just again point out the opportunities which we have seen so far. Thank you, Jill, for the clarification or confirmation on YouTube. So what we have seen so far on this chart of S&P is that first of all, we were able to capture this down leg from exactly this price level of 39.54. The analysis was that below this we have huge downside remaining. Later on in the upcoming webinars, I was able to pinpoint the turning point here, and we were also able to capture this up leg, right? So far this market has followed our analysis very well. Okay, so at this point, uh, what we have is still a continuation of the same analysis. So basically, I have not changed the analysis at all. The analysis is the same, but we need a confirmation if we want to see or if we are going to see further downside. So let's have a quick discussion on what is this confirmation I'm talking about and what is this further downside that we may expect on this counter, right? So let me just quickly draw this before I head over to the discussion. Okay, so what we have on chart is expected movement as a diagonal, sorry, not as a diagonal, as a zigzag structure in the downward direction with a triangle in the middle. So this is the expected movement. We expect this to be the A down, the B up, and should be followed by the C down. Okay, so the expected targets for the C down are what are the targets? Let me just quickly check on the higher time frames. Yeah, so we are expecting this level 3740 and maybe lower. So these are the expected target for this progression, right? And the important point here is that if this count is being followed at this point in time, we don't have to hurry anything. We have a clear confirmation if we see a break of this trend line, this one. Okay, so why is this trend line important? Because in this structure of a triangle, this is the BD trend line, and once the BD trend line is broken, that is suggestive that more downside should follow. Okay, so as I said, it is very clear. We wait for this trend line to break. If it breaks, then I have already discussed the targets are 3740 or lower levels. So 3740 or lower levels, I'll just type it here, are the targets. Secondly, if you are very aggressive, like if you are heavily interested in selling this market for some additional reasons, then the technical stop loss currently is at 3861. So 3861, if it's crossed to the upside, then probably there is something else going on this counter. Okay, so that's the level to look out for on the downside as well as the upside. It's a very clear what do you call trading opportunity here. Both ways it is giving some clear what do you call possibilities of clear signals. So definitely keep S&P on the chart. So nothing more to add on S&P here. And next chart we'll discuss will be of Nifty. If you have any doubts, you can just post the same in the comment sections while I load the chart of Nifty here. Thank you, Madhavji, for the confirmation there on YouTube. Okay, so here it is on screen, the chart of Nifty 50. And it is very interesting here to note that when we were discussing it in the last webinar, I was discussing the price was, I think, 28 December. Yeah, the price was here, right? And I first discussed that 1 second, let me just quickly check the dates. 28th December 2022, last webinar, and here it is also 28th December. Where is it? Yeah. So in the last webinar, there were two views which we discussed. The first view was that we expected that from this point of reference, we had a flat correction incoming. So this was a flat A, B. And when we did the webinar, the price was here. And I said that it will go down for C and then go up again. Right. After that, I quickly checked the Singapore Exchange, the SGX Nifty chart. SGX Nifty was trading higher. So I suggested alternate possibility that if the market opens gap up, then it will see some correction and then it will go further. Because in that possibility, the C was already complete here. If the market opened gap up and a small correction, generally people book what do you call profits in the morning. So that's what I was referring a small correction possibility and then further up. So what happened was that SGX Nifty lost its overnight gains and later on went on going down and the market opened down. And our first analysis, which was that the flat correction has started from this point, the market will first go down and then take out this high and go up, literally followed to the point. And I literally traded it both ways. First, I traded it to the downside and then I traded it to the upside as well. So it followed our plan literally. And again, if you want to check it out, just check out the last webinar, the 28th webinar. Just head on to my YouTube channel. Let me see if I have still loaded that up on screen. So this was the last webinar on 28th December, the 18th webinar, and Nifty was discussed around 52 minutes, right? So it off here to we are doing here in these webinars, how many trades. And just again a reminder, in the last 2 weeks itself, we have got big movements on various different markets, including Nifty, S&P's 500, crude oil, gold, Euro USD, USDJPY, etc. etc. Let me see if I can load to the point where I have discussed the whole hypothesis. So this was the second hypothesis that if the market goes up straight, gap up, then that means the C is complete here. But where is that gap down possibility? Yep, there it is. So this is the possibility suggesting that if the C is, as you can see over here, C has some downside remaining, and once that completes, we will see a leg which will take it higher than the wave B higher, right? So this is all the discussion from the last webinar. I'm saying that more downside remaining followed by a new wave which will take the market higher, right? So this was the C I was pointing, more downside remaining, and this is the high which should be taken out once the market heads higher again. So that's what I was pointing at when I said we were able to catch it, right? So let's check what's happening on Nifty right now. So right now, by the way, if you were able to catch this move or you were able to take note of it in the last webinar, it will be nice if you can let other people here know in the comment section. Anyways, back to our analysis. So here things are a little bit unclear so far. So the unclarity comes from the fact that this looks still corrective to me and it is still heading in the upward direction, right? So what I think is happening here is that from this point of reference of 18888 something, which was on the date of 1st December 2022, we seem to be having a possible WXY here. Possible WXY. Oh, wait a second, there are other possibilities here of 1, 2, 1, 2, and 3 down. Yeah, this is still valid. So anyways, there are some other possibilities which I discussed in the last webinar, but since the direction is more or less the same, I'll just discuss this one. So first things first is that if we are correct here, then I'm expecting that this might be the X here, followed by the Z down here, right? So that would make it a triple zigzag. And if you guys are not familiar with that pattern, I'll just quickly draw that on screen. First leg down W, next leg down Y, next leg down Z. All three are joined by connecting wave X, connecting wave X, right? So if this is a second X over here, then it should take out the low of Y, right? So that's our take right now, that this market can take out the last low. Okay. So very simple analysis. When are we wrong? We are wrong if this market heads back and touches or takes out the level of 18,210, 20 something. So basically, if it sustains above this level, let me see. Yeah. So I'll just place an alert over here above 18,220. If we see market sustaining above that level, then we will probably assume, or we will have to assume, that this market might be doing something else. But as long as that is not happening, this is the WXYXZ count to the downside, which we will continue to follow. So pretty clear on Nifty, right? I'll just wait a few moments here. If you have any doubts, you can post them in. Otherwise, we head over to the chart of BTC. Okay, so in the chart of BTC, as we had discussed in the last and the webinars before it, it is still open for more downside, and our analysis so far has remained that this market has completed the three wave correction A, B, and C, and because it has completed the minimum requirement for a correction, it can straight away fall down here. Keep in mind, it can also continue to go a little bit higher and then fall, right? But we are not interested in any longs until this market crosses 21379. So until it 21379 to 21400, basically this region. Right? So we are not interested in any longs on this counter, right? Only thing we are interested in is possible sell-off, and the targets for the new incoming lows are 15,240 to 14,800, roughly speaking, and much lower levels are also possible, as we have discussed in one of the lengthy discussions we did in, I think, 10th or 11th webinar. Okay, so not much to add here on BTC, and if you want to check my detailed what do you call longer time frame view, maybe check out one of the past few webinars, like 11th, 12th something. There I was discussing it in much greater detail on higher time frames. So guys, that was basically it for our charts discussions. If you have followed me so far, then I'd like to request you to share this content in your circles, at least 3 of your circles. If you are having a Discord channel, a Telegram channel, or something like that, please share it in all those circles. And if you are just having social media handles like Twitter, Facebook, etc., please share my YouTube link or website link when the website will have this video embedded, so that people who are not familiar with me will be able to check out my work and reap benefits of it. Okay, and also do not forget to hit the like button on YouTube, subscribe it, and also if you are on TradingView, hit the rocket button there, right? It helps the algorithms push the content up. Lastly, as I keep discussing it, I think I've discussed it in the introduction part, but I have this book, Think with the Markets. You can get it on Amazon. It is available via Kindle, so electronically it will be transferred to your device and you can read it. You can either use the Amazon links here or just type in the name of the book, Think with the Markets, on Amazon, right? And other things, I have the video course, the personal classes, training program LT. You can check them out if you're interested in learning directly from me. And we discussed beforehand as well My forecast accuracy, you can check anytime. For 6 years consecutively, I have had 80% plus accuracy, which is unseen in this industry. So we boast about it a lot. So you can check it anytime over here. That was it from me, guys. I'll see you guys next year, basically, because the next webinar will be on 2nd January 2023. So have a good new year in advance, guys. Zalatan, what are you interested in contacting me about? If you are interested in contacting me about the training program, then it is only available to people who have done the video course. So if there is something else, it's most likely available on the website. If not, you can just use the contact us page on the website here with your detailed query. There is the contact us page here. One important thing here, email subscription. Basically, if you subscribe to my emailing list, if there is any important update, any new course or book or some other important stuff, I will update you via email. So email is sort of like an insider information thing. So if you are interested in staying in touch, you can click here and subscribe. And yeah, Zlatan, this is the contact us page. You can use it if you have something to discuss. That was it, guys. Nice to know that, Jill. Thank you, Madhavji. Okay, I'll be signing off now.